And he tells me, well, Victor, now that I used to be at 687 with these two opportunities right here, I'm going to be at $1 million. He's like very happy. And now he's just trying to find a way for him to pay down that debt, okay? Right? So when we put this together for him, we are estimating that this year we're helping him save over 75K plus in taxes. On today's session, I'm going to show you exactly how I had an advisory session with a client who happens to be a physician. He's in the Midwest and he practices and lives in the Midwest. Let's go over some of the basic information of my client. So my client, he is a physician. He lives in the Midwest. And last year, his level of income was roughly 687K, right? This year, his level of income is going to be even greater. And I'm going to be going on details on that in a little bit, but last year he made 687. This year, he's going to be making about $1 million plus in income, okay? He's married, he's got 2 kids, and has a very happy life. And then, of course, he's got some investments. He's got an investment with Vanguard. And there he's got about 75K, okay? So high level of income, he's got a family, and he is also an investor, right? He has been able to save money over the years, and he has been able to amass an investment account of roughly $75,000. And you might be asking, well, Victor, your client has high level of income, he's got a family, he's got investments. Why is he talking to you? Why is he looking for help? And I appreciate that question because as many physicians, as many doctors that I work with, oftentimes they know how to work as a physician, and oftentimes they're able to save money. But there's some other aspects that they would like to improve upon. And that's why we typically have advisory sessions, because then we go on a deeper dive and we try to understand what some of their goals are and what some of their wants are, and then what are some of the issues that they would like to resolve. And so let's go ahead and talk about some of those, okay? So my client, some of his goals are the following. So let's write here goals. And he wants to get into a better debt management, okay? Currently, he's got a renovation loan of roughly $250K because he put a pool in the house and then he did renovations, right? And this is very cool because he tells me, Victor, my kids love it. My kids' friends are in the house all the time, especially in the summer. And he's very happy with this investment in his house. He's like very happy. And now he's just trying to find a way for him to pay down that debt, okay? He also has a couple of cars, and those cars, the liability, the loans are about $200,000, about $100,000, right, on 2 cars. And then, of course, as many physicians, guess what is some of their debt right after med school? Exactly, student loans, right? He doesn't have much. He's got about $150 on student loans that he would like to pay off. Okay? But you might be asking, well, Victor, he's got the level of income to pay down the debt. How is it that he's not able to do that? It's a great question, and let's talk about that. So, as many people, right, who like to do things themselves, he's been using one of the free platforms to prepare taxes, his own tax returns. And at this level of income, you might be imagined that he's definitely overpaying taxes without strategies in the tune of north of 100K in overpayments. Why? Because he doesn't know what he doesn't know. He just knows how to work as a physician. He's doing taxes himself, so he's definitely overpaying taxes in the north of $100,000. But there's a promised land that he wants to get to. But because he doesn't know how to plan better for taxes, then he's overpaying. So that's the conversation that we're having. We went on a deeper dive. We understood the goals. We understood, some of the background. And now the conversation is, how do we get there? But there's more, right? I asked my client, so you made 687 last year. This year you're making about $1 million, right? How is it that you're getting to $1 million 1 year to the other year, right? From 687 to $1 million. And he tells me, well, Victor, the reason I'm getting to at that level of income is twofold. Number one, it's because now I'm certified to do PRP, which is a very technical, high specialized procedure, pain management procedure for arthritis, joints, and so forth through injections and things of that nature. So he's become an expert, and now he's able to provide that treatment to his patients. So now he's got more volume of work, more services to his patients, right? So now his level of income is going to be going up. Not only that, but also because he is so good at what he does, right? As a physician, he's been approached by a professional sports team, right? For him to become a consultant, a medical consultant for that team. And he tells me, well, Victor, now that I used to be at 687 with these two opportunities right here, I'm going to be at $1 million. And if he keeps preparing the tax returns himself, it's only going to double. So instead of overpaying $100,000 in taxes, what's going to happen is likely if he doesn't do anything, it's going to be going to $200,000. Just because he's making more money and the tax rate up there is north of 37%, IRS, federal, plus state. So then we have two problems that we need to resolve. Number one, he would be overpaying taxes because his income, it's going to go from 687 to $1 million, right? He's doing taxes himself, and 50% it's going to be going on taxes, clearly, right? But then that's going to take us to problem number two, which is the debt management. Because he's overpaying in taxes, he then is not going to have the money for him to lower his liabilities, to lower his debt. So then that's the conversation that we're having. That is exactly how I said that I'm going to help my client, right? I understood where he is, where he's been. Now I'm understanding where is it that he wants to go. And then the idea is to put together a plan, a strategy, in order for him to get there. That's exactly what we're going to be doing, okay? Okay, so then some of the questions that I asked my client is, okay, so this right here, are you working with a group? And he's like, yes, I'm working with a group, right? And he's at W-2. Ask him, could part of this be a 1099 income or a 1099 relationship with the group? And he goes like, yes, perfect. So we have that check, okay? And then I ask him the same question about the sports team. Can you have, instead of a W-2 relationship, can you have a 1099 relationship so you can have more control over your income? He goes like, yes, I can have that conversation. And then we check. So these two questions and these two answers are key. Why? Because by having a way for us to manage how income is reported for tax purposes, we can then implement the right strategies with the right framework in order for him to get to the promised land. Okay, so what are some of the basics for that? Perfect. So the basics are, let's form an LLC for professional services. Likely, we're going to be then having an S election with the right W-2 salary attached to it. So you're not overpaying as he's overpaying here, right? Because with his own entity, he can then assign the salary that he could qualify for. And by doing that, he would be then saving on FICA, which is Social Security, and Medicaid. So by doing this move, we're going to help him save a lot of money on taxes. So then these 200, it's going to start coming down. Okay, so that's move number one. The second move would be to rent the house to his business, that he's got now a new business, under Section 280A of the Internal Revenue Code. Is going to be able to rent his property to the business for 14 days. Right? Why? Because now he's able to report his income. He's able to shift his income to an entity. So we're doing an income shifting strategy. Then we're going to assign a level of salary where he's not overpaying FICA. Then he is renting the house to the business, tax-free for him, right? So tax-free, but then it becomes an expense for the business. You see those two levels? In essence, he's keeping money, but then it's becoming an expense for the business, okay? And this is under Section 288 of the Internal Revenue Code. Also, what else can he do? Perfect. So he can do, he's got a couple of cars, right? He can then, of course, take a car and other assets, right? And contribute those as a capital contribution to the business. We have to make sure that one of the cars, as well as any other assets, are for business purposes, for the professional service that he's providing to the group as well as to the sports team. Okay, so he can either buy a new car or he can use one of the cars that he already had, okay? With, of course, with the adjusted basis. And once he does that, he's going to then have what we call depreciation. Right? That's the third move. He's going to then have assets that he can depreciate against this 1099 income, which is being housed in this LLC S Corp. Right? He's renting the house to the business. That's another write-off. And then he is lowering his FICA by a large amount. Okay? He also wanted to make sure, Victor, what else can I do with my kids in terms of investments? Great, perfect. You can hire your kids to do some sort of work for marketing purposes or admin, right? You have to make sure that you're following the rules and regulations in the state in which you live in, right? To make sure that you're qualified. But in his case, he would qualify. So then you have about 20K in write-offs, and then the kids can open what we call IRAs. And then these IRAs can go into funding the college education for the kids. So in other words, we've made a few moves here that are not going to necessarily write off 100% of the taxes in this case. But remember that my client is transitioning from a W-2 to a 1099. He doesn't care too much about real estate. He doesn't care too much about, creating a portfolio of real estate. He's a very conservative. He just, for the most part, wants to focus on being a doctor, right? And that's wonderful because he's doing PRP for his clients, his patients, right? He's helping a sports team. He's helping the athletes to keep healthy so they can become more productive. Think about how productive and how happy his patients are going to be because now they're going to have less pain. And now the athletes are going to be able to play more, perform more because they have the better treatment. That is actually what's making him happy, right? And then, of course, my goal is to, you have that covered. Let me help you manage your debt through tax planning, right? So when we put this together for him, we are estimating that this year we're helping him save over 75K plus in taxes, right? So then this money is going to then go to lower his debt, right? And then over the years, we follow similar strategies depending on his level of income, his appetite, and what else he qualifies for as we keep on working together into the future. And then a couple of years out, all this is going to be paid off. By focusing on actually advising him and helping him work on what he's effective at, which is being a physician for the group and also for a sports team, we go in and say, okay, these are some of the strategies that we can implement, that we can design and implement that are specifically tailored for you because these are your goals. And here's the beauty. Goals are not static. Goals are going to be changing because you accomplish those and then you go to the next challenge, right? That's why when we work with clients, we work on different tiers, right? So the first year is transformation, right? The first year is transformation. We understand exactly this. Where is it that you've been? Where is it that you want to go? And let's put together a planning order for us to help you get there. Then we go to the second phase, which is implementation. When we go into implementation, that means that some of your short-term goals have shifted because we help you accomplish your first year's goals. So we implement a plan for your second set of goals. The third step would be then management. That's typically second and third years going forward, right? So I just wanted to share with you how is it that we help, in this case, a physician with this level of income and some of the tax situations that he had, and how is it that we can help him solve those issues for him to get to the promised land and accomplish some of the goals that he has. Again, my name is Victor Delerme, and I just presented to you a whiteboard session on an advisory call that I had with a client who happens to be a physician, and we put together a specific plan in order for him to accomplish his goals. If you would like to have a consultation with us or an advisory session with me, please click the link below, and I'll see you in the next one.